Welcome to Talk Tickers, your shortcut to being well-informed on the latest earnings calls. Today, we're diving deep into BRP Inc's second quarter fiscal year 2026 results.
That's BRP, yeah. Think Sea-Doo, Ski-Doo, Can-Am, the big recreational product company.
Exactly, and they just dropped numbers that really got the market buzzing. Now, you might be looking at the general economic picture, all those headwinds, and thinking, how did they manage this?
Right. That's what we're going to unpack here. We'll look at the financials, the strategies they're using, and what they're saying about the future, give you a clear sense of where BRP stands.
And the market definitely liked what it heard. Shares jumped pretty significantly.
They certainly did. Shows this story resonated.
Okay, so let's get straight to the headlines then. BRP put up a really strong Q2 for fiscal 26. Beat analyst expectations pretty handily.
Yeah, quite handily. The non-GAAP diluted EPS, that's the adjusted earnings per share, gives you a better feel for operations that came in at CO 92 cents.
CCO 92 cents. And the consensus.
The FactSet consensus was around $C.47. So, I mean, that's a $C.45 beat. Huge difference.
Wow, okay. And the top line. Revenue.
Revenue also strong, $1,888.2 million. That beat the consensus by about $108 million.
So up year over year.
Yep, a solid 4.3% increase compared to last year.
Okay, but it wasn't all rosy. I saw something about margins.
Right, a bit of nuance there. Gross margin did dip a little, down to 21.1%. And normalized EBITDA was down 9.2% year over year.
But net income was up.
Exactly. Net income actually surged 36% to see $57.1 million. So, a bit of a mixed bag underneath the headline beat, but that net income jump definitely caught attention.
And clearly caught the market's attention. Shares up on both the NASDAQ and TSX, and volume way up too.
Oh yeah, trading volume was nearly 4 times the average. Big reaction.
Okay, so those headline numbers, pretty impressive. But digging a bit deeper, North American retail sales were actually down 11% year over year. That feels like, it feels like the opposite story. What's going on there?
That's a great point, and it really gets to the heart of BRP's performance this quarter. It's not a simple story. You have to look at the regions and the products.
Right.
So while the U.S. retail market saw a pretty significant 15% drop, Canada was actually up 4%.
Oh, interesting. Driven by what?
Mostly off-road vehicles, their ORV segment, and international markets were strong too. Latin America up 22%, Asia Pacific up 5%. So it's not a blanket slowdown everywhere.
Okay, that makes more sense. A regional difference.
Yeah.
And what about the product mix?
Similar story there. Year-round products, think they're side-by-sides. ATV's revenue was up 13%.
Okay.
But seasonal products, your Sea-Doos, your Ski-Doos, that revenue was down 13%.
So how do they square that circle? Strong overall revenue beat, but softer retail, especially in the big U.S. market, and seasonal stuff down.
Yeah, it leads right into the inventory question. And that was like a huge theme on the earnings call. BRP made a really deliberate effort to reduce inventory.
Okay. Cleaning out the channel.
Exactly. Dealer network inventory is down 20% compared to last year and 13% just from the previous quarter.
That's significant.
It is. And maybe more importantly, if you compare it to pre-COVID levels, on a like-for-like product basis, inventory is actually down 1% now.
Even with sales being higher.
Especially for ORV. Inventory is down 5% compared to pre-COVID, even though retail sales for ORVs are up 50% over that same period.
Right. So they've really leaned things out. But didn't that cost them some market share? Particularly on older models.
He did, and they were upfront about that. They said, look, we gained share on our current year models, the new stuff.
But lost on the older ones.
Yeah, the non-current units. Because other companies were apparently discounting heavily to clear out their old stock, BRP decided not to chase that, basically.
So it's a strategic trade-off. Protect the brand, maybe.
Protect the brand, improve dealer health. That's the idea. Less old inventory clogging things up means dealers have more capacity, lower financing costs. It makes the whole network stronger. They feel that cleanup is mostly done now, except maybe for snowmobiles.
Right, setting the stage for new products.
Yeah.
And they certainly announced a few at that Club BRP event.
Oh, yeah. Big product push. This is another key part of the story.
What stood out to you?
Well, the new generation Can-Am Defender SSV, the side-by-side, they called it a ground-up overhaul.
That's a big claim. In a big market, right? Utility side-by-sides.
Huge. Represents something like 2/3 of the whole side-by-side industry, so nailing that is critical.
And they went electric, too.
They did. The Can-Am Outlander electric APV. They're touting industry-leading towing capacity for an electric ATV. Plus, there's a new 6-wheel drive Outlander Max, a more powerful 300 HEP engine option for some Sea-Doo switch pontoon models. enhancements across the board, really.
So the strategy seems to be clean up inventory, then hit the market with new, often premium stuff to drive demand.
Precisely. Widen the price points, inject some excitement. Especially important when, as we discussed, the lower end of the market might be feeling the pressure more from financing costs and inflation. BRP is leaning into that premium space.
Makes sense. But it's not all smooth sailing, is it? Tariffs are still biting.
Yeah, that's definitely a persistent headwind, and it actually got a bit worse.
Oh, it was also.
The estimated gross impact for the full fiscal year is now $90 million. They were previously guiding $70 million.
Ouch. Why the increase?
It's a mix: higher steel and aluminum tariffs, new tariffs on copper, and they've expanded the list of products hit by tariffs to include some ATVs and side-by-sides now, too.
So $90 million, that's a big number. What are they doing about it?
They're pulling multiple levers, trying to optimize manufacturing to meet those USMCA content rules, shifting where they source parts from, even doing some assembly work in-house that they might have outsourced before.
And pricing?
And pricing, yeah. Especially in parts and accessories where they might have a bit more flexibility. After all that mitigation effort, they expect the net hit to earnings per share to be around $C.25 to C.30 for the year.
Still a hit, but they're actively managing it.
Definitely managing it. It's a necessary part of the game right now, unfortunately.
So beyond tariffs, just stepping back to the macro picture, you mentioned inflation, interest rates holding steady. How's that playing out for consumer demand generally in powersports?
Well, the whole industry is feeling it, right? That uncertainty around tariffs, inflation sticking around, no rate cuts yet. It impacts consumer confidence. And maybe more practically, it affects financing approvals.
Especially for entry-level buyers.
Exactly.
Yeah.
That's where you see the squeeze. It becomes harder to get financing approved, or the terms aren't as good. This is why we're seeing this bifurcation, this split in the market.
Premium stuff does okay, value stuff struggles.
That's the trend. High-end products are holding up relatively well. BRP, being positioned there with a lot of its new innovations, especially the utility vehicles, is benefiting from that.
But not totally immune. You mentioned electric motorcycles.
Right. Even BRP isn't immune everywhere. The sort of global slowdown in EV adoption seems to be hitting their electric motorcycle sales. They mentioned needing some price reductions there just to drive traffic and interest.
Okay, so it's a complex picture. Inventory down, new premium products up, tariffs biting but being managed, and a split consumer market. What does BRP say all this adds up to for the rest of the year?
They're actually guiding pretty confidently for the second half.
Really? After a mixed Q2?
Yeah, the guidance implies a significant ramp up. They're forecasting full year revenue between C$8.41 cents and C$8.30 billion, and normalized EPS between C$4.25 and C$4.75.
Okay, what does that mean for H2 growth then?
It means big growth, like 12% revenue growth in the second half compared to last year, normalized EBITDA up 31%, and normalized EPS up a whopping 51%.
Wow. Where's that growth coming from? Is it all Q4?
Mostly Q4 seems like. They expect Q3 earnings per share to be kind of flat year over year, so the real acceleration is baked into the final quarter.
And longer term? Any signals there?
Yeah, they expressed, quite a bit of confidence in the company's potential, mentioned the backbone to potentially double EPS from where they are now in the next, say, 2 to 3 years.
Double EPS?
Yeah.
That's ambitious.
Very ambitious. They did add the caveat, very dependent on industry dynamics, which is fair. But it shows their confidence in the strategy. They also think their target for normalized EBITDA margin, 17%, is even more achievable now that the Manitou boat business sale is closing soon.
Right. Shedding that business helps margins. We should probably mention the CEO search is still ongoing. Transition expected by year end.
Correct. That's still in progress, aiming for a transition by the end of this fiscal year. Another thing for investors to watch.
So the market reacted well. Shares popped. Analysts seem to be buying into the story, raising price targets.
Yeah, National Bank, for example, raised their target. The narrative seems to be BRP managed the inventory situation well, maybe better than expected, and the new product pipeline looks genuinely exciting.
So for you, the listener, thinking like an investor, what are the key things to track going forward?
Definitely keep an eye on retail trends this fall. How well do those new ORVs sell? What's happening with financing approvals? Does that loosen up or stay tight?
And inventory levels.
Absolutely. Need to see if they maintain that discipline. And of course, the execution on the electric side, particularly that Outlander electric ATV, plus always how they navigate those tariffs.
Okay. And capital allocation focus on the business, dividends, buybacks on hold.
Yeah, they said buybacks are on the sideline for now, citing economic uncertainty. Seems prudent. Gives them flexibility.
All right, let's shift gears slightly. Time for our This Is Not Financial Advice segment. We try to cook up an outrageous but maybe plausible trade idea based on the call. What have you got for BRP?
Okay, so sticking with the themes. BRP is doing well with premium products, right? The new Defender, the electric stuff. Meanwhile, the value end of the market, maybe competitors more reliant on entry-level buyers needing financing. They might be struggling more.
Right, that bifurcation we talked about.
Exactly. So here's the thought. Go long BRP. The ticker is DOOO, but hedge it.
Hedge it how?
By shorting a basket of stocks that represent the lower-income consumer discretionary sector. Maybe specifically companies heavily exposed to entry-level powersports or those very dependent on consumer financing access.
Interesting. So you're betting on BRP's premium focus and execution winning out over competitors stuck in the squeezed value segment.
Precisely. It's a bet on that split market dynamic continuing. You're playing BRP's quality, innovation, and cleaner inventory against the broader challenges hitting the lower tiers. Betting on their specific strategy, not just a general recovery.
A play on quality and execution versus the macro squeeze. Got it.
Yeah.
Again, just a thought experiment, folks, not actual advice.
Definitely not advice, just an idea sparked by the earnings call details.
Okay, so let's wrap this deep dive up. BRP's Q2. Better than expected headlines, driven by some really aggressive and apparently successful inventory management.
Yep, and coupled with a strong pipeline of new, mostly premium products.
They're navigating those headwinds. Tariffs are worse. North American retail was soft overall, but they seem to have a plan with pricing, supply chain tweaks, and focusing on less rate-sensitive buyers.
And they're guiding for a very strong second half, especially Q4, which clearly boosted confidence. The market liked the leaner inventory and the new toys.
That long-term goal of doubling EPS is bold, but it shows their ambition. It seems they feel well-positioned, assuming the industry doesn't fall apart.
Right. Confidence seems high internally, based on their execution so far.
So here's a final provocative thought for you to chew on. BRP wants to consistently wow consumers with market-shaping products. That's their goal. In this current environment, a tricky consumer landscape, maybe a slower EV ramp-up than hoped, how far can innovation alone really push growth in powersports? Is amazing product enough, or does the broader economic tide need to turn too?
That's the multi-billion-dollar question, isn't it? How much can one company outperform the environment just through innovation? Something to think about. That's all for this deep dive into BRP's Q2 earnings. Remember, everything you heard here is just for informational purposes. It is definitely not financial advice.
Please consult a professional before making any investment decisions.
Thanks for tuning in to Talk Tickers. Join us next time as we keep cutting through the noise to bring you the key insights from the world of earnings calls.